All right, it seems like we have a good number of people here. So, Megan, I don't know. I think maybe we should skip going around for intros. Maybe if everyone wants to, is there a chat box here?
Mhm.
Yeah, I think just to, in the best interest of time, we only have about 45 minutes here. We have a lot of great speakers, a lot of great content to go through. So, just in the interest of time, if you would like to share your name, what city you live in, maybe what brought you here today in the chat. Just a couple housekeeping things. Carly went over the community meeting guidelines when we first started. So I'm not going to read all of that, but just, throughout, if you're able to, please consider turning on your camera. But mute when our presenters are going through their slides, acknowledge everyone's voice and time. And as we go through, if you have a question, if you just throw that in the chat, so I'll be combing through them. So once we wrap up and go through questions, I can go through those. So today we're going to hear from Brian Miller, Jack Camp, Andrew Farrell, and Sergeant Clint Pagano, who you heard from briefly. And we're going to start with Brian Miller from FEMA. So Brian, if you could take it away.
Yes, good evening, and thank you for inviting me. Just to give you a little bit of information, I'm been with FEMA for about 16 years or more, and I'm involved in the individual assistance, FEMA's individual assistance recovery. That's a part that I'm involved with. And we get involved after there is a presidentially declared disaster for individual assistance, and there's a whole process for the governor to request it and for it to be analyzed and to determine if it meets the threshold and the requirements to be declared a presidential disaster. And when that's done, then our registration intake lines open up. You can register through our 1-800 number, which is posted on the slide, or through disasterassistance.gov. So there's multiple ways for individuals to register. If you notice also, there's a link on there for the Individual Assistance Program and Policy Guide. That's one of the best documents ever printed that gives the whole outline at a high level and at a low, and gets down into the weeds later on into the document to explain a lot of the details. So that's very important. All of the information is. FEMA's program, Individuals and Households Program, has two parts of assistance. It has the housing assistance, which can pay for rental assistance for both owners and renters, can pay home repair for owners, and then replacement for owners. That being said, the law, puts some limitations on what FEMA can pay, and so that's one of the restrictions that we have to abide by and live under. We cannot freely do, we have the requirements of the federal government and to the laws written in the Robert T. Stafford Act that make us, sort of stay within line. The other side of the program is what's called the Other Needs Assistance Program. And the Other Needs Assistance provides assistance for personal property, transportation, medical, dental, funeral, childcare. And some of those items are what we call SBA dependent. And I speak of SBA, which is Small Business Administration, which Jack is in this group, and he will explain more about it. But there's a deep partnership between FEMA and SBA. The minute you register with FEMA, we have a computerized handshake that goes straight to SBA. So that just shows you right from the very beginning how close the relationship is. And some people were referred straight to the Other Needs Assistance Program. Others people are referred to the Small Business Administration. Once you complete and go through that process, you may be referred back to the FEMA Other Needs Assistance, and then you can move forward with that part of it. One of the things that occurs after a person is registered, they have to be inspected. Then once the property is inspected, the disaster inspectors list all the disaster-related damages. And based upon the registration information, the disaster-related damages, then the computer programs, what we call the business rules, may make a decision automatically. And then if it does, that makes them, that expedites funds, that increases, increases or decreases the time frame what it would take for funds to be delivered. Now, if there is a problem within the registration, for instance, we do a lot of cross verifications electronically through public records for your occupancy, ownership, certain things like that. And for instance, if someone has recently moved, the address may be changed. If recently been married, then some of the documents in the public records may not have the most current name. So there's going to be some verifications that are not going to say verified, or that it's going to pass through the automated system because of the human life that goes on. And then after that's all sent into FEMA, and FEMA starts the process, if you get a letter or an award and the person isn't happy with it, they can just contact FEMA. They have the right to appeal. So it's a full circle of the program, and it can be a never-ending circle to a point. But the key part is registering, being inspected, and keeping FEMA up to date on any activity that you're doing, any changes that's going on with you, but then in turn, keep in touch with FEMA to find out what's going on with the registration and in your specific case. That covers it in a nutshell. I know we're pressed for time, so I don't want to go into any more weeds.
No worries. Thank you so much, Brian. Are you hanging out until 8 o'clock in case anyone has any questions?
Yes, ma'am. I will be here.
All right, sounds good. And like I said, anyone, if you think of anything, feel free to throw any questions in the chat. So next we'll hear from Jack Camp from Small Business Administration, SBA support. So I'll hand it over to Jack.
Thank you. Well, good evening. Very glad to be here. Let's move on to the next slide and get the show on the road. The SBA plays a very important role in the federal disaster response. The federal disaster response is a process, and I'm going to kind of outline it real briefly here for you. When a disaster happens, these losses are unexpected, and they create a great hardship for many homes and businesses. And SBA helps respond to this by offering low interest federal disaster loans to homeowners and renters, as well as businesses and private nonprofit organizations that were damaged by a declared disaster. Our loans make recovery both feasible and possible, and they're very affordable. I'm going to show you a little bit of the details of them, and you'll see how affordable they can be. And in fact, the SBA is the primary source of federal financial assistance for private property owners, both businesses and homeowners, in a disaster for your uninsured losses. In fact, in this current disaster, we have already approved over $180 million in loans here in New Jersey, and in New Jersey, New York, and Pennsylvania were over $350 million. So there's a lot going on here. You can go on to the next slide, please. Okay, so what is this process? This is the federal disaster assistance process. How does it start? Well, it starts at the local level. When an event occurs, your local responders come out, and if they need help, they might call on aid from their neighboring communities. Perhaps the Red Cross comes out. If it's really too much for them to handle, they'll get in touch with the state, and the state will send help. If the state realizes that they're overwhelmed, then they can contact the federal government. And usually, of course, you think of FEMA, but whenever FEMA goes out, SBA goes out with them. And FEMA will come out to do a preliminary damage assessment. And they're not really trying to determine all the damage, but just is the damage sufficient to justify a disaster declaration? If FEMA cannot declare a disaster declaration, in smaller events, the SBA might be able to declare a declaration on its own. So, you know, in large and small disasters, SBA can be involved. Of course, there are disasters that are too small. If it only happens to you, then you really need to have a preparedness plan. Hopefully you've mitigated your risk and you're adequately insured. But for declared disasters, the Small Business Administration's loan program is going to be here. Let's move to the next slide, please. So in a presidential disaster declaration, after FEMA looks at it and says, yeah, this is pretty bad, Mr. President Biden, can you declare a disaster? And he says yes, and he did for New Jersey. He made assistance available for under two different types of declarations, for individual assistance and for public assistance. Individual assistance provides the aid like Brian was talking about earlier for temporary housing, emergency needs, and necessary expenses for individuals and households. Another type of disaster declaration is public assistance, and it can be a little confusing, but that is limited to aid for state and local governments. It can provide aid for private nonprofit organizations if they provide a service, a critical service of a governmental nature. But even in those cases, FEMA may ask the nonprofit to come to SBA to see if they can qualify for a loan first. So those are the two types of major presidential disaster declarations. And in these declarations, FEMA is the coordinating agency. There will be other agencies that can get involved, such as the IRS or HUD, but FEMA is the one that coordinates it. And of course, that's what people have heard of the most. Let's move to the next slide, please. So what have we got in this disaster? Well, we have 12 counties here in New Jersey that have been declared for individual assistance. And in those 12 counties, you can apply for an SBA disaster loan. Our home loans, the interest rates are as low as 1.563%. Business loans as low as 2.85%, and for nonprofits as low as 2%. The terms can be for up to 30 years. We can lend a homeowner up to $200,000 for the real estate losses. Both homeowners and renters can qualify for up to $40,000 for their personal property losses. Businesses can qualify for up to $2 million for their uninsured property losses. Now, for businesses, there's another program that's available. It's the Economic Injury Disaster Loan Program. And these are available to small businesses. And it's available not only into the primary counties that were declared by FEMA, but also into all of the adjacent counties. And as you can see here from the list, that can even cross state lines. A very important thing that I want to point out is that both FEMA and SBA have a filing deadline. For physical disaster loans, you have to apply by December 6th. You need to register with FEMA by December 6th. For our economic injury loans, if you can wait longer because a lot of times businesses do not know how a disaster affected them. You can apply for an economic injury loan up until June 6th of 2022. Let's move to the next slide, please. So as I mentioned earlier, if FEMA cannot declare a disaster declaration, the SBA may be able to declare a disaster declaration, and in which case the same loan program is available. It's identical to what's available under a presidential disaster declaration. But in these declarations, FEMA's not around. There aren't any grants. Let's move to the next slide, please. Okay, so our disaster program, as I've mentioned, that we cover physical damages, and it's for more than just small businesses. We can make loans to non-farm businesses of all sizes. We can make loans to homeowners and renters, as well as private nonprofit organizations, and this would include churches. And in fact, about 90% of our loans are for homeowners and renters. So, I mentioned earlier, over $180 million here in New Jersey we have approved for loans. Over 90% of that is for homeowners and renters. Our economic injury disaster loans are available to small businesses, and they are for working capital, basically. They provide working capital to a business, to provide funds to pay ordinary and necessary expenses that a business can't pay as a direct result of a disaster, but would have been able to pay had the disaster not occurred. So let's move on. So how do you apply for a loan? Well, this is a presidential disaster declaration. So the first thing you do is you register with FEMA. All businesses and most homeowners will be referred to the Small Business Administration. You're a homeowner. Why do I want to get a loan from SBA? Even if the interest rate is low, it's a loan. I have to pay it back. Well, that's true, but you're not going to find a loan with interest rates that low, or certainly not one for 30 years on those terms. Also, a lot of people, they know they can't afford a loan. They know their credit history doesn't warrant a loan. We don't want them to decline themselves. Don't decline yourself. Go ahead and apply to SBA. We're not going to charge you to apply. You don't have to take a loan if one is offered. If you can't afford a loan, if your credit's that bad, we're probably going to agree with you. And then what happens is we send you back to FEMA. And as Brian mentioned a little bit earlier, some of their loans, their grants are SBA dependent. And so you might get more grant money. But if you don't apply to SBA, we can't make that decision. We can't refer you back, and you might miss out on grant money that would have been available to you. So if you're referred to SBA, visit disasterloanassistance.sba.gov and apply for the loan. Doesn't take very long, and you don't have to take it. It doesn't cost you anything. Okay, so you apply for the loan. You can get a phone call. Someone's going to talk to you about your damages. You'll be referred to a loan officer. We'll let you know if you need to provide additional information, and hopefully tell you that we've been able to offer you a loan. We'll try to get that answer to you within 2 to 3 weeks. That's our goal, to get you an answer on your application within 2 to 3 weeks. Once your loan is approved, you'll be assigned a case manager who will work with you to close your loans. He'll tell you what additional documentation is available. Our loans up to $25,000 are on an unsecured basis. Over $25,000, we do require insurance. Insurance, but also collateral. We're not collateral-based lenders. If you don't have equity in collateral, if you don't have any collateral available, we'll go ahead and make you a loan. But if you do have collateral, we're going to take it and protect the interests of the government. Anyway, when you close your loan, first disbursement generally will be up to $25,000. For a business, if you've got both a loan for both physical and economic losses, you might be able to get up to $50,000, up to $25,000 for each one, depending on your eligibility. As I said, your case manager will walk you through the loan closing process to help you get all the loans dispersed and get your money so you can rebuild your home. We can move along, please. So, what are the requirements for a loan? First one is a big one. You have to be in the declared disaster area. You have to have an uninsured loss. Secondly, these are loans, so you have to have a reasonable credit history. We're a little more lenient than your typical commercial lender, but you do have to have a reasonable credit history. And then finally, you have to be able to show that you can repay a loan, and typically we're going to look at information contained in your tax returns to make that determination. So if you get a loan, what are we going to require? When it comes to insurance, we're going to require flood insurance if you're in a flood hazard area. That's the law. We can't waive that. If you live in a specified flood hazard area, we have to require that you get flood insurance. Take it a step further, if your damage is due to rising water, even if you're not in a flood zone, if you get a secured loan, we're going to require flood insurance. Now, if you get a secured loan, we're also going to require hazard insurance, your typical insurance policy that any mortgage lender is going to require you to obtain. Let's move along, please. So I can't give a presentation without mentioning our partners, our resource partners, the Small Business Development Centers, SBDCs. They're part of the state, but they're chartered by SBA, partially funded by SBA. They're wonderful. They're usually set up through the university system. The Women's Business Centers is another great source. They're sprouting up all around the country. SCORE is a very old and storied organization that can provide counseling for businesses. And then finally, the Veterans Business Outreach Centers. All of these organizations, we consider them our resource partners, and they're here to help you stay in operation. They can do things like help you develop operational plans, consider alternative sources of revenue, how can you reduce your losses, update management and technical services. Let's move along, next slide. And they can provide important information on federal financial resources to build and to rebuild and have access to the working capital that you need after a disaster. And it's not necessarily just an SBA disaster loan. I mean, if there are other funds out there from other organizations, say HUD has a program or some other federal agency or state organization has a program to assist you, they can steer you to what works for your business. So, you know, I encourage any small business to get in touch with one of these organizations. We can move on. And of course, you know, this is just a little bit more of the services that these organizations provide for our small business community: counseling, management and technical assistance, business planning, reconstructing damaged or destroyed records. That can be critical. Writing or rewriting business plans, and accessing government contracts and procurement related to the disaster. And then finally, and so that's it for my presentation, and I'll be happy to answer your questions after the individual presentations. Thank you.
Thank you so much, Jack. So I'm working through some of the questions that are popping up in the chat. We could chat more once we get through our last two speakers. So with that said, I'm going to hand it over to Andrew Farrell to talk about flood insurance. He's from the Risk Reduction Plus group.
Hello, everyone. My name is Andrew Farrell, and I specialize in flood insurance. I do flood insurance all across the nation, so there really isn't a case I haven't ran into yet. Next slide, please. So a little bit about us. We've been in business for over 20 years helping people lower their flood insurance, and all of our staff members are certified floodplain managers. I personally specialize on the flood insurance end of it, but if you have any questions regarding a flood zone, if I can't help you, one of our staff members most likely specializes in that specific question. Next slide, please. So some flood statistics. Flooding is the #1 natural disaster in the US. All 50 states have experienced flood losses in the past 5 years. So for example, flooding does not just stick to the maps. 70% of Hurricane Harvey losses were outside of flood zones, meaning that they were in X and they weren't required to carry flood insurance. And 20% of NFIP claims in general are in these X zones. Another shocking statistic is, with all these floods going on, 94% of Americans do not have flood insurance. Next slide, please. So some solutions with your flood insurance to help lower it and find the right policy for you. The first one is to mitigate to compliance. An example of this would be elevating the mechanics, elevating the property itself, or adding engineered compliant flood vents in an unfinished enclosure. The second one would be making sure your policy is rated correctly. The way the National Flood Insurance Program is set up, or the NFIP, the rates are set across the nation. So I should offer you the same exact premium that any other agent out there does. However, we do find sometimes that information is input incorrectly into a system. So just making sure it's accurate can help make sure you get a lower premium. And the third option is private flood insurance. Just to go over briefly the differences with flood insurance, there's really two avenues to go. There's the National Flood Insurance Program. That one's backed by FEMA, the government. Like I said, those rates are set. They offer flood insurance to any home that's in a participating NFIP community. And then the private flood insurance avenue, most of the private flood insurance carriers are backed by Lloyd's of London. They create their own rates so they can differ from carrier to carrier. The private carriers also have the right to accept or decline properties, and they base that mostly off of the location and the flood loss history. Next slide, please. So the National Flood Insurance Program, it's really based off of three legs. There's the floodplain management, which is the building codes, hazard identification, which is the floodplain mapping. As many of you are aware, in New Jersey in particular, over the past 3 years, a lot of communities have updated their maps. So you might have experienced being put into a zone or your base flood elevation changing. And the third leg of it is the flood insurance to help offer some protection, worst case scenario, if your property does get flooded. So the flood risk zones, there's the severe flood hazard zones. Those are your A, AH, AO, AE, and on the coast near some bays and oceans, there's VE. If you're in a severe flood hazard area, your mortgage will require you to carry flood insurance. If your property is in a X zone, it's not considered a severe flood hazard area. So your mortgage company will not require that flood insurance. However, it is still available for you. All right, and I'm sorry about that. I'll try and slow down speaking there. Our company in particular, we offer a flood risk evaluator. And what we do for the flood risk evaluator is we'll review your property through the National Flood Insurance Program to make sure that you're being rated correctly, or if there's any ways to lower it, as well as we can look into the private option if the NFIP premium is high for you and it's accepted. Some of the top errors we see on flood insurance policies is incorrect residency status. There's a difference in premium if it's a primary or a secondary residence. So you want to make sure that you're not paying more because of that being incorrect on your policy. Pre-firm structure not rated. So what I mean by this is if you have an elevation certificate which lists the floor elevation levels on your property, you can submit that to the NFIP to see if it may help lower your premium. We found that people have these done and they're not being applied to their policy. So just by having them applied, they can help lower that premium. Undocumented flood vents. Somebody might have engineered flood vents in their property, but maybe the agent is unaware or they're not listed on the elevation certificate, so they're not getting credit for them. Incorrect building diagram number. If you have a property that, say it is a full height enclosure, unfinished, they would consider it a diagram 7, but somebody might list it as a diagram 1, which is a slab on grade home. Those rates differ a lot. So we want to make sure your building diagram is correct. And then the last thing we'll check for is a LOMA, which is a letter of map amendment. If your living floor is above the base flood elevation without making any changes to the home, you may be eligible for that LOMA, and that will remove a flood insurance requirement. You can still have it in place though. So this is about the mitigation steps of it, and there's another representative that's going over them. engineered flood vent. So I'll skip this just to save some time here. And you can go to the next one after this too. It should get into the risk rating 2.0. Ooh, the coverage limits we can. So for coverages for flood insurance, with the NFIP, residential properties have 250,000 in building maximum and 100,000 in contents. For commercial properties, they have 500,000 in building and 500,000 in contents maximum. The private carriers can offer more coverages if you would like more coverages, but the mortgage is only going to require these limits. Next slide, please. In this slide, I break down some of the differences in coverages. One of the things that I've experienced with these most recent claims is homeowners have policies with basements or subgrade, below grade areas, and there is a difference in coverages if you are talking about the living floor and above or areas below grade. So I always want to make sure that homeowners know if you do have, say, contents down in the basement, there is limited coverage down there, and I can send this document to anybody that's interested. Next slide, please. All right, the cause of the reforms. So the National Flood Insurance Program in October of this year rolled out a new rating program, and it changed the way that they rate properties from how they have in the past. The reason for this is because the program is not bringing in enough premium to pay for some of these big flood events that are happening. Just one example, in Katrina 2005, $1.9 billion of premium were generated, but the payout was around 17.5 billion. So they have to make some changes to try and keep up. A couple things with risk rating 2.0. As I said, it rolled out in October. That's for new business, new purchases. If you already have a current NFIP policy, you won't be switched over to that program until April 2022. Some of the differences, it's a more detailed rating system. The old one was basically based off of the base flood elevation, the foundation type, and your floor level compared to that. This new program takes more into account the home value, what the house is worth, the replacement cost, distance to flooding, how close you are to that river or that bay or ocean, type of flooding, if it is riverine or ocean risk, historical data, if the property has ever had a flood loss in the past, as well as that area in general more. And then one big change, elevation certificates are not required for quotes anymore. They used to be required if a property was built after a flood map. So we don't have to have them to quote anymore, but they may still help the property. Next slide, please. Things that are staying the same, that mandatory purchasing requirement. If you're in a severe flood hazard zone, you will have to have flood insurance, and then the coverage limits have remained the same. So what we can basically do is review that property for you, let you know if there's any mistakes, verify what flood zone you're in, if it's going to be required, and then we can look into the property itself, provide a quote through the National Flood Insurance Program, make any recommendations if mitigation will help lower the property, and let you know exactly what it'll lower it to. This way you know if that work is worth the return on investment. And what we need in order to run these reports. So if you have an elevation certificate and can submit that to us, that'll help with the National Flood Insurance Program. If you want to send over your current flood insurance declarations page, we can match that to give an apples to apples type comparison. And then, once we receive those documents, we'll run that report and be able to review everything with you.
Great. Thank you so much, Andrew. So let's wrap up with Sergeant Clint Pagano, who's going to talk about preparedness. He's joining us from NJOEM.
Good evening, everyone. I will try and be quick. I know we're running low on time here. My name is Clint Pagano. I'm with the Emergency Response Bureau within NJ Office of Emergency Management. My day-to-day job, we respond to large incidents and disasters, and we work closely with county offices of emergency management, so we have close relationships. And when these disasters do occur, we are able to have those relationships and get the assets that the counties may need from us. So today I was just asked to talk a little bit about some residential preparedness, maybe some basic information just to go over some safety things and some things to think about during a flood. So essentially, I'm going to start off with the weather. Obviously, this is the most important thing, is to be able to know what's coming your way when you live in a flood-prone area. And it's important to have those apps and those push notifications on your phone. So when the National Weather Service does provide a watch or a warning, you are available. You know that they're there, and you're able to make the arrangements. Obviously, when a warning is issued, flooding is happening, and you need to move to higher ground if you are in an area where it is flood prone. We've seen, recently with these events like Ida, with the extreme amounts of rain, we've seen areas that don't flood, and these have made it very difficult for evacuations, things of that nature, because areas that generally are your escape routes for people that are familiar and live in areas that generally flood. Now we have areas that are flooding that, don't flood, and to get out of those areas, it becomes very difficult. You can move on to the next slide there. I just want to talk a little bit about vehicle operation. It's very important. Obviously, when roads are flooded, that key term there, turn around, don't drown. We hear it all often in flood preparation. It's very important. 6 inches of water can take away an adult, 12 can take away a car, and 18 to 24 can sweep away a van, SUV, or a pickup truck. So, you want to be very careful and never drive around those barricades. You can go to the next one there. This one's important. More than half of all flooding deaths occur in vehicles. People think they're safe in their vehicle, and it's just not the case. So I wanted to talk a little bit about preparedness for your home and things of that nature. So you want to prepare yourself and your family by creating an emergency supply kit and a family disaster plan. Your kit would include things such as water, medicine, non-perishable foods, chargers for phones, things of that nature that'll keep you self-sufficient for possibly up to 3 days. Your plan for your family, that would include your evacuation plan, a place to reunite with loved ones, out-of-state contacts, and, we don't want to forget our pets, right? They're part of our family. You want to know your area's flood risk. If you're unsure about this, you can contact your local county Office of Emergency Management. American Red Cross also has some good information on that, but it's important to know these things so you're prepared. As we heard, obviously, flood insurance is a very important thing. You can't wait till the last minute to get that, so we need to get that ahead of time. FEMA offers a wealth of information on, as we heard here from the other individuals, as to other ways to protect your properties. But one of the important things is to make sure that you have videos and photographs of all your important possessions, because when the time comes, you need to claim those things. You need to be able to document and prove everything that you have. There's also many other things you can do to prepare your house, like installing backflow valves, plugging floodwaters from entering, and things of that nature. I want to talk a little bit about what to do during a flood. You want to make sure you protect your home and secure your valuables. You can fill your bathtub, sinks, jugs of clean water in case your water line becomes contaminated. You want to bring your outdoor items inside or fasten them down. If water starts to rise in your house before you've evacuated, you want to retreat to the second floor, and if necessary, the roof. And just make sure you're prepared to evacuate. Fill your car's tank with fuel and things of that nature. And avoid coming in contact with floodwaters. Just remember they are contaminated with sewage and things of that nature. And there also could be down power lines and electrical wires within them. And then basically, if you are directed to evacuate, make sure you don't wait. Listen to the public safety officials, heed their advice, and leave as quickly as possible. They're going to provide you with the most specific information. And just stay tuned to your local radio and television and make sure that you have your emergency kits with you. And then just real quick, after a flood, you want to be careful when you do return, when authorities say you can. Just beware of down loose wires, beware of snakes or animals that have entered your house from flood water. Open your windows and ventilate, things of that nature. And of course, with food, when in doubt, throw it out. If it's been contacted with floodwaters, it's going to be contaminated. So, there's tons more information that can be found on ready.gov, which is FEMA's website, or New Jersey OEM also has their own website, ready.nj.gov. There's tons of information on there, things you can do to prepare yourself for inclement weather. And that's really all I have.
All right. Thank you, Clint. And thank you to all of our speakers this evening. A lot of great information, a lot of information. All slides and recordings will be available on the project website. And we have a couple minutes. We did get a question in the chat specifically for Andrew. So Andrew, is there any talk of insurance companies offering to fund municipal water retention projects in order to offset the cost to the public? This would be in circumstances where federal funds do not cover the total cost of such projects. The clear benefit to the insurance companies, of course, would be a dramatic reduction in flood claims.
Yeah, and I was actually just typing on that one. So let me just speak it. I'll make it a little easier. So regarding like insurance companies talking about any funding for municipal projects, there hasn't been any talks of that. And part of that is the National Flood Insurance Program is backed by FEMA and the government. So, any government funding that goes to help make places more resilient is watching their interests, trying to protect the properties around it. And then on the other avenue, the private flood insurance carriers, they can accept and decline properties. So if there's ever an area that is very risky, as opposed to putting money out and funding a resilient project, they would most likely just pull themselves out of that area. So they haven't really talked about it, but technically with government funding, the NFIP being the government program, there is money being applied to help make places more resilient.
Okay, great. Thank you. And I did my best to answer some of the questions just in the chat, but at this time, if anybody had a question or needed clarification, if you could raise your hand, just in case there's a couple people who have questions at once. And this could be about any of the topics that were covered tonight. I don't really see any hand raised, so if anyone wants to unmute, if you want to share any thoughts you may have or any questions, feel free. Everyone just did such a great job explaining. All their questions are answered. So I just wanted to say thank you again to all of our speakers and thank you to everyone for coming out tonight. There will be more community meetings. So however you found out about this meeting, keep checking the project website, your email for updates. Megan, I think, was there a survey for everyone to fill out? Okay, great. So,
thank you.
All right, great. So Megan just put in the chat a post-meeting survey just to let us know how it went. So we could, make any adjustments for the future, or if we're just so awesome, we'll keep it up. All right. Any parting thoughts, Megan, or are we all going back to like a main?
So we're in the main room. If it seems like the other discussions are still ongoing. So if anyone would like to switch to another room to get the last few minutes of it, you can feel welcome to. And again, we'll be following up in a few days with the meeting recordings and meeting notes posted to our website. And again, want to thank our speakers for joining us and sharing all your knowledge with us. Oh, it looks like we have a hand raised.
Okay, great. Go ahead, Rich.
Can you hear me, first of all?
Yes.
Okay. My question is, I happen to own a few different properties. And during Storm Sandy, we were devastated by the storm. When applying for FEMA at that point, we were told that it is only good, FEMA will only help your residence where you live. So the other properties that we own, I could not get any financial help. I was wondering why that is set up that way when We still pay the same taxes. We still carry the same insurances, but we suffered a great loss. But it only covered our home. Can someone help me with that? Because that was very hard for me to digest, which almost took me broke.
This is Brian with FEMA. And I just want to let you know, I'm sorry for your loss on all your properties, but the law is what establishes that we can help the individuals in their primary dwelling. Now, as far as rental properties, just like myself, the rental properties would be covered under SBA, which I had a flooding event and I had to go to SBA to get my rental property, get a loan out for my rental property. So, I mean, there are options there. It's not a grant. It is a small business administration loan. And that's, like I said, that's the way the law is written.
I appreciate that, Brian. However, I think that law should be tweaked a bit because what happens during the time of devastation, you have no resource, nor can you pay back a loan when you're hit as hard. I almost feel like I'm penalized for doing it the American way, going to work every day, becoming somewhat what I would call a little bit more successful, paying my bills on time, being able to purchase another house or 2 or 3. And then all of a sudden, a superstorm comes and it's all taken away. And I have nothing to fall back on. But I appreciate the 1.5% loan. But where do you even find that money to pay it back? Before you even get the money, you're in default.
And as far as the law goes, that would have to be, through the congressmen, through the, the presidents and going that route, which, I understand there's a lot of it I don't agree with either, but it is the law and it's what we have to go by right now. There's been a lot of changes. There's been the Katrina Reform Act, the Superstorms, the Sandy Reform Act also. So there's been a lot of changes over the years that have improved the process and have helped a lot more individuals. And then this year recently, we've instituted the equality program, which is where we're able to assist a lot more individuals than we have in the past. So there's progress being made and moving towards assisting more individuals. But the root of helping businesses is not FEMA's program. That's why we have that partnership with the Small Business Administration.
Well, that's a hard pill to swallow, but I get it. And I understand that FEMA has come a long way. If it wasn't there, everybody would feel like I feel, because it would almost be if every member of my family owned one of these properties, and then I would have been protected. But maybe there should be something else in place. I understand the rules. I understand the law. But I think there needs to be some type of change up there, because I understand you referenced it as a business because they're rental incomes, but some are not. They're places that are sure homes that my children go to. So now I can't provide for my family the way I would like to. So I'm penalized again. I'm not arguing or debating an issue. I'm just saying that maybe there's somewhere where we need to go to get some help, because if it should happen again, which it almost happened with Ida, I don't know what else to do. I don't know where to turn.
Well, I appreciate the question, Rich, and thank you, Brian, for addressing it. We are past our time. So I just want to say thank you again to everyone for joining. Thank you to all of our presenters, to DEP, to Arcadis, and all of our sub-consultants. Thank you to our interpreters and our ASL interpreters. Carly, I don't know if you had any other parting thoughts, but.
No, thank you. Thank you so much. It seems like it was a rich conversation, and it sounded, I only caught the end of what Rich was saying, but we've it sounds similar to a lot of the other feedback that we've been getting and that we need to kind of think about and talk about more.
Well, thank you very much for listening. That means a lot because maybe it will get to the right ears. I think it was very informative tonight, and I'll be back on any one of your Zooms in the future.
Great.
All right. Well, have a great night, everyone.
Good night.